Hi and welcome to the Market Alert for Thursday, the 14th of October 2021. So Bitcoin and Bullion bounce as bonds signal Fed faux pas imminent. Well, there's been plenty of those over the last 13 years. Also yesterday, inflation anxiety, bonds and bullion soar after CPI number. Remember, nothing lasts forever. That's a tongue-in-cheek comment, of course, having a dig at the Fed saying that inflation was transitory, of course, which it's not. FOMC minutes confirmed tapering begins in mid-November or December, like that, or December, at 15 billion monthly. Several preferred more rapid bond buying cuts. All participants agreed a moderation in the pace of asset purchases may soon be warranted. Yeah, and also an increase in interest rates as well to combat inflation, and that's when the whole system starts to come down. Speaking of inflation, Beijing is trapped. China producer prices surge at fastest pace in 26 years, and then Beijing will have social unrest on its hands. And here's a really good article that I would suggest you read. As I've said for a long time, the Build Back Better campaign and the World Economic Forum are behind the current climate change propaganda. And you can see why, because it's incredibly lucrative. It really is worth a read, this is, because it works out at something like 5 trillion a year is going to be printed by central banks to aid the World Economic Forum's agenda. So yeah, just food for thought. Told you it was at the back of all of this, all the way back to March 20 with the COVID pandemic, so-called pandemic. So have a read of this one. It's a beauty if you've got the time. News for today, we've got Bowman speaking at 1 p.m. on unusual time. We've then got the usual Thursday unemployment claims, but along with this we've got PPI, core PPI, and crude oil moved a day this week because we had the government agency shut on Monday in observation of Columbus Day. So crude oil inventories are out today. They're forecasting a surplus of 1.1 million. You wouldn't believe it, would you, when you look at the price of fuel at the pumps? We've had a surplus for a few weeks. Last week also 2.3 million as well. We've then got Barkin speaking. I tell you what, there's a lot of these members that I've never heard of. They're just wheeling them out at the moment, aren't they? It's like they're on tour with the Rolling Stones. It's just incredible. Right, let's have a look at the Dow for yesterday. That will be in here then. So let's have a look at the daily chart. We can see that this moved up yesterday after moving down initially, traded down towards the 62% retracement, and then reversed and managed to make its way up. And overnight is also moving to the upside as well. Let's draw in some new fibs on the upside here, because from this high to this low and then projected back. So from there to there, I'll just redo that, just caught one of the other lines there. You just have to be below those. So there are the upside targets for the Dow should it move higher. It needs to close above the 5-bar moving average, but it's all currently closing or trading above the 20-bar there. So these are the targets, as I say, for the upside should the market continue to move. But it's amazing, isn't it, in one day how they can switch things again and bring it back. And it's bad news. You know, inflation's bad news for the stock market, and yet, no, we'll just brush that aside. You know, the elite, the 1% that the World Economic Forum talk about in that article, going to make sure that they're getting wealthier by the second and keep bringing the market back, even if it does cost the middle classes in order to do so. So there you see yesterday's initial reaction in the Dow in the afternoon. See the demand coming in there, lots of demand in the 30-minute chart, and then it was just a one-way bet bringing the market back. But to have the shakeout to begin with, it's obligatory, isn't it? Make sure everybody's shaken out at the open, get them to go short, get them to think that the market's moving lower, and then bring it back. So yesterday we see the Dow also, same pattern. So let's just go from here, because this is the last sort of high that's left behind, and then you've got the low here. Let me just narrow the chart so I can get to the bottom of that marker there. So from here down to here, you'll see that we're at 78%, heading towards the 89 there, just closing back above, or trading above the 20 bar moving average, because we haven't closed yet. Let me just remove all these other lines that we don't need through the 62 yesterday, and that's where we are for the daily chart of the DAX. Now, if we move lower, let me just put some, just in case we have a swift turn around in events here, these would be the downside targets for the DAX 40. And in the 30-minute yesterday, we moved lower to begin with, and then the market found support, and it just kept moving then, apart from in the afternoon when it attempted to move lower with the Dow. But as soon as the Dow found support, which we've just seen in the 30-minute chart with the two buying demand bars, the DAX then followed suit and moved to the upside. Didn't really react to the FOMC either, but after it did follow the Dow on the upside, and overnight prices are sideways to higher, which you can see there, and above yesterday's high as well. In the 2-minute chart, I did record this yesterday, but Windows decided to do an automatic update yesterday afternoon at about 4 o'clock, as I had to pop out and then came back and found that it restarted the computer. So this is yesterday's market action, and as I was just talking about, they tried to move the market lower initially. Let me just go back to the futures market opening. It was a bit of a damp squib, and as I said, you know, the market was waiting for the CPI numbers, and it started out that way. As you can see, prices were sideways, and then all of a sudden they were ignited, breaking to the upside above the 200 MA in the 2-minute chart, and then just trading, and then moving and trading sideways, and then moving higher, trading sideways, and then moving higher. So you can see the pattern there, as the market just held above the 5-bar moving average and the 20-bar moving average. It then went into its sideways move, waiting for the CPI numbers, which came out at 5%, I think. And then the market moving lower, had a retracement here, and then following the Dow futures to the upside. There was a sell signal that coincided with the Dow having its sell-off, which we saw in the 30-minute chart. Didn't come down a great deal compared to the Dow, but notice this price bar here coming off the lows, and the volume as high as it was when the market kicked off initially from 230. So we can see them buying back in here, and then prices moving to the upside. This trade wasn't as profitable as it looks, because the market came back in this bar. I think it was around 10 points or something like that I actually managed to pick off on this one. Not a great deal, and then watched it move lower, traded sideways, but then as the Dow sort of went into its capitulation, and then the demand came in, the market just stopped there, and then they reversed it and brought it back. So overnight, like I say, you can see the market's just moving higher. It gapped higher. We've not really filled the gap, have we? Yeah, we've filled the gap there. We've come back and filled the gap. So the market is now just sitting and trading above yesterday's high. So finally, in the metals yesterday, the silver market, dare I say it, is actually back above the 20-bar moving average. Looking for a pullback now to buy this. I still have the order at the buy limit order at $20 an ounce. Just in case the market did move lower, but at the moment it's starting to take shape on the upside. And interestingly enough, for the last 2 days, does it show it in the 30-minute? Yes. We've got the opposite of what we've normally had, where we've had the shakeouts, and then the market has continued to the downside or managed to recover slightly. Here you can see for the last 2 days, we've recovered after the initial 1 p.m. shakeout. So watch for a bit of a pullback at 1 p.m. But I've got a bit of one there, but this starting to move back now to the upside. So maybe silver's time has come again to move back to the upside. So we'll just have to see. But it'll be interesting for sure, because we've at the moment got to close above the 20-bar moving average, but not a convincing close above 23 dollars an ounce, which we'll need to see. So again, I'll be looking for that pattern to continue at 1 p.m. and the prospect of trying to buy back in on any sort of pullbacks that we get. Gold also moving sharply higher yesterday. A really good move for gold, as you can see there, breaking out of the sideways move, trading up to the 200 MA in the daily chart. But that's the second day of closing above the 20 bar moving average. Also, the 5 bar now is above the 20 as well. So let's see what happens. We need a collapse in the dollar. It's bouncing back a bit at the moment. We need to take out the 89% retracement that you will see here. We need the dollar to break that 93.73 level, and then also, of course, the low that we've got here. And once broken, we can then start to look at retracements to the downside of this market. There will be some from here back to here as well, but the longer term numbers would be in this range here. Okay, that's it for this one. Let's see what happens today with, let me just remind myself of the news. It was PPI numbers, yet they will be very interesting. They're forecast to actually be slightly lower, but we'll wait and see. And also the crude oil ones will be interesting, as well as that's continuing to move to the upside. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.